Hello, traders. FX Pip Collector here. Today is Friday, so TGIF, and it is March 14th. So this is my morning video where we like to take a look at all the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely do check out my Discord channel, linked at the end of this video down here in the corner and in the description of the video. If you'd like to check out my website, it's fxpipcollector.com. Get you access to all these benefits listed below and more. So anyways, first thing first is I like to take a look at the news calendar so we can be aware of what the news is each day. Overall, not really nothing too big of a news event today. We got consumer sentiment and inflation expectations. This is the primary version. There's two versions of this, and this is primary one is definitely the one that has the higher impact on the market, and that's at 2 p.m. UK time, or what's that, 10 a.m. US time. So that's really all we have, unless Trump comes out with some tweets or something today. To the dollar pairs overall have been, this is the US dollar index on the daily time frame, and the dollar pairs overall have been in an extremely tight range for now 1, 2, 3, 4, 5, 6. Today's day number 7. At some point, this thing is going to break out with momentum. And I mean, the trend is definitely still down, so there is definitely a chance that it does keep going down. So we have to keep aware that there definitely is a chance that it keeps going down. But I do see what looks like 1, 2, 3, 4, 5 waves. You would kind of expect that we would now make a crescent to the whole 5 waves if this is really a wave 1, perhaps maybe even turning into a big old giant wave 2 and then going down for a big old wave 3 several weeks later. But we can't really confirm this wave 2 until we at least get a breakout of this range, which we definitely don't have yet. So keep that in mind because it pretty much tells you what to do on all the US dollar pairs themselves. Moving on to the euro dollar. Now, the euro dollar is definitely, kind of right in between two Fibonacci levels, but it is very overextended. It is starting to kind of pull back a little bit. It really still hasn't made an engulfing candle in my eyes. So, I mean, really, the trend is definitely still up, and it definitely is still a chance that it goes up again. So be aware that the trend is not confirmed to be going down at all. But I got my Fibonacci retracement on here because if we do start a significant pullback, then it would probably go down to at least a 38% minimum. Could even go all the way down to the 78%, especially if it really is a wave 2. But we really can't confirm any of that yet. So going down to the 1 hour time frame, this is where we got our Fibonacci retracement on the last impulsive move up, which is the 5 waves over here. So we haven't taken out any structure to the downside yet, so the trend is definitely still up. This whole sideways action right here does look extremely corrective, and we are sitting at the 78%, so if it does go up, if it does break structure, there is definitely a chance that it continues the uptrend. On the other hand, if it goes down and takes out this low, then I would consider that an engulfing candle on the daily time frame, and I would probably at that point definitely switch it up and start looking for shorts primarily, looking for someplace between a 38 and a 78% pullback on the daily time frame. Hopefully, we get a breakout one way or the other because the dollar pairs have been extremely slow this week. So going down to the pound dollar. Pound dollar, same type of thing. I mean, yeah, it totally looks like it's going to go down. It's been an extremely slow 6 or 7 days for the dollar pairs, but it definitely seems like it would more likely go down and make a crescent to this last move up. But we can't really confirm that. We don't have an engulfing move. We don't really have any reason whatsoever to say that this is not going to continue up like that. So we do have to be very careful with assuming that it is in a pullback. For me, the sort of time frame structure should confirm one way or the other, because if it goes down and takes out this low right here, then that's a break of structure, and that would tell me that we are making a much bigger pullback on the higher time frames. We definitely have not done that yet, so I have my Fibonacci retracement on here. If I do see a Fib bounce, any one of these Fibonacci areas, and I do see like a nice engulfing move to the upside, especially if you get like a break of structure, then that definitely would tell me to continue to look for longs in an uptrend. As long as it doesn't go down and break these lows right here, I'm definitely still primarily on the long side. So moving on to the Aussie dollar. Aussie dollar is quite a bit different because of the Aussie weakness that we've had lately, but I still think at some point it's going to be a 1, a 2, and I still think at some point it's going to take off and make a wave 3. I think eventually this is going to go all the way up, even though it's going to take probably several weeks or a month or so. for it to get up there. I do think at some point it is likely to get at least up to that high and maybe even further than that. But right now we are definitely still in a correction, it looks like. Um, Now, I got this possibility that this is a WXY because it looks like three waves down. It looks like one, two, three waves up. So that could be a W. That could be an X. That means that we're now in a wave Y. So that would be impulsive down wave A. This would be wave B. It would bounce off a Fibonacci level, which I don't know which one. I just know that I would observe to see. And then go down for wave C. And that would be an ABC of Y to complete the 333 for the WXY. Now, in order to go short, I would have to see a nice Fibonacci bounce. I'd have to see like a double top, maybe on the shorter time frames at a Fibonacci level and a breaker structure to the downside. Otherwise, if it just goes up and bounces, doesn't give you a breaker structure, then there's never a sorting opportunity. So just keep it in mind, pay attention to those Fib levels. Moving on to the Kiwi dollar, exactly the same analysis as the Aussie dollar, which is why I don't cover it. US dollar CAD, I still think is going to end up going down and finishing off this way B. I think this is an A. I think this is 1, 2, 3 of B. And I still think it needs to go up and make a C. And this is going to be an ABC of 2. This is going to be a 1. And eventually, probably several weeks from now, it's going to go down and make a big old giant wave 3. So definitely still looking at that as the most likely scenario. So going down to the 1 hour time frame. Very slow overlapping pattern on this also. I'm kind of wondering if this is like the A. Well, first of all, this is the A down here, and then this is an A, B, C, and B because it made 1, 2, 3 waves down. I'm kind of wondering if it's actually going to drift up today to finish off a wave C, and then that would be the A, B, C, and B. So you'd have an A, B, and then it would go down and make the bigger wave C to complete the bigger A, B, C, of B that I was showing on the daily time frame. So I have my Fibonacci retracement on this move up right here. I'm definitely watching my Fibonacci levels very closely for like a double bottom type scenario, a nice engulfing move to the upside at a Fibonacci level, preferably a breaker structure to the upside. Moving on to the US dollar Swiss. US dollar Swiss is definitely still in a downtrend. I think at this point it probably needs to go up to at least one of these fib levels before it turns back down, but I definitely am looking at this as a downtrend still, and I do not see any reason to believe this move up is anything more than a correction to the last wave down. So going down to the 1 hour time frame, we have to be a little bit cautious about these type of situations because we could be expecting it to go up to a fib level and it could literally just keep going down because the higher time frame trend is definitely down. But I would kind of expect it to possibly go up to the 38, maybe even the 50%, maybe give you like a double top at one of those levels and a break of structure, then a nice continuation of the downtrend. I have no idea whether it's going to happen at the 38 or the 50. I just know that if I watch these fib levels close enough, I should be able to recognize that 345 shape break a structure to the downside at a Fibonacci level. So definitely keep an eye out for that. Moving on to gold. Gold made it all the way up to my 261.8 Fibonacci extension. At this point, I would say that this is probably a wave 5. I was saying that earlier this week that it could be a wave B and it could turn down like that, and it didn't. It never did turn at a fib level, so there was never no reason to go short. I definitely think this is a 1. I think this is a 2. I think this is a 3, expanding ABC of 4, and we're probably in a wave 5 right now. This definitely doesn't have to be over. It doesn't have to stop at this level. It could go beyond this level if it wants to. So definitely bullish. So, like I was saying this earlier this week when we were down here that it could go down and make a big old push to the downside. But I said if it breaks structure to the downside, that would be a short. What happened? It made higher low, higher low, higher low, higher low. There was never a reason to go short. There was never a double top at a Fibonacci level and a break of structure to the downside in order to go short. I personally would still be looking for logs. I mean, it definitely looks like a 1-2. It probably we're in a wave 3. Eventually, we'll probably make a wave 4 that'll be about the same size as the wave 2. But like I said, it doesn't really have to stop at this level. I kind of think that it's actually going to hit that $3,000 area too, because that's a pretty big round number. So don't assume that anything is over. It could easily keep going up. At some point, I do think it is going to make a wave 4, which would probably be a pretty big correction. But it doesn't have to do it now. It could do it. It could go up another few hundred pips before it decides to make a wave 4. So definitely recommending longs in an uptrend on gold. US dollar yen. All the yen pairs to me still are in a downtrend in my eyes. This move up right here is likely just a crescent to this last wave down. So we got our Fibonacci retracement on the last wave down, as you can see. looking for shorts in a downtrend still. Moving down to the 1 hour time frame, if you've been following along with my videos, this is playing out exactly as I said it would yesterday in the last couple of days. I said that this was an A, I said this was 1, 2, 3, a B. I said that we're likely to go up to probably one of these higher fib levels for a wave C. So if you do see that double top, 3, 4, 5 shape with the breaker structure at a Fibonacci level, then that's the end of a correction I would be looking for, the continuation of the downtrend. So moving on to the Euro Yen. Euro Yen definitely did respect the 78%, and it also respected that 138% Fibonacci extension I had on there. I still think there is a chance that this is just an ABC correction, and I still think there is a chance that it does end up going down. But we have to be careful. We really don't have a breaker structure to the downside yet, so we can't really confirm. So going down to the 1 hour time frame, what I have here is an impulsive move down, and then I got my Fibonacci retracement on that impulsive move. So I'm watching these Fibonacci levels very closely to see if there's a reaction. I would like to see a double top at a fib level with a breaker structure, maybe on like the 30-minute, 15-minute time frame to go short. It could end up turning into a 1, 2, 3. The key is seeing that 3, 4, 5 shape type move and a breaker structure to the downside. If it just goes up and bounces like it did, and then goes up and bounces, doesn't break structure, and just continues the high low series, then there's no reason to go short whatsoever. So pay attention to your structure, pay attention to your fib levels as always. Moving on to the pound yen, I still think the pound yen is going to make a move down eventually too. We got our Fibonacci retracement on here. It's extremely slow, just like the dollar. We do have a little bit of a 78% fib bounce, so I still think there's a good chance this is also going to turn down when it is ready to turn down, that is. Going down to the 1 hour time frame, we got kind of the same type of thing. So I got my Fibonacci retracement on here as the yield dollar, that is. I'm looking at the 78% as the last area. We don't have a breaker structure. This push down doesn't prove anything. If I see it go up, make a double top, and then go down and break structure with a nice engulfing move, that proves that we're done and that proves that we're going down. But just a normal Fibonacci bounce doesn't show me the market's turning. If it just keeps on making those high, low, high, low, high, low, there's no sorting opportunity. There's a big difference between that and this, which that right there would be a sort for me. This right here would tell me that it's just time to keep on looking for longs every single chance you get and possibly holding on to longs. So keep an eye on the 78% for that double top. Breaker starts to the downside. If it doesn't happen, then there's no reason to go short. So anyways, as always, don't forget to join my free Discord trading community, link down here in the corner. And as always, thank you for watching and happy trading.